Has it ever happened to you that you marked an FVG, waited for price to tag it and then took a trade, but instead of making money, the trade hit your stop loss because the fair value gap didn't hold? Don't worry, as this happens to 99% of the traders out there, as they forget to take into consideration these 5 steps before marking the FVG. So let's get started. So today we have a lot to cover, including what is an FVG, types of FVGs, and how to identify high probability FVGs. So let's move on to our first topic as to what is an FVG. Fair value gaps or FVGs are basically imbalances, as you can see here. This imbalance, inefficiency in the market, which is created when one side of the market is more dominant than the other. So at any given point there are two sides in the market. One is the buyers. Here you can include all the limit longers, market longers, everything comes here. And then you have the sellers. Sellers include all the market sellers, limit sellers, everything related to selling or short selling comes in here. If at any given point one of these gets more dominant than the other, for example, suppose if buyers get more dominant than sellers, then a bullish fair value gap will be created. However, if sellers get more dominant than buyers, then a bearish fair value gap will be created. Now let's come to the topic as to how do we mark these fair value gaps. So when you are marking a bullish fair value gap, you take the first candle high and the third candle low. So as you can see in the schematic, we took the first candle high and then the third candle low. So this became our fair value gap. Remember, this is a bullish fair value gap. However, if you want to mark a bearish fair value gap, you will take the first candle low and the third candle high. As you can see in this schematic, we took the first candle low and the third candle high, marking a bearish fair value gap. So I hope everything is clear up till now. If you are marking a bullish fair value gap, you take the first candle high and the third candle low, as we have marked here, bullish. And if you are marking a bearish fair value gap, you will take the first candle low and the third candle high. As you can see, bearish fair value gap. So now let's move on to types of fair value gaps and see some examples in real life to get a better understanding of what they are. So our first type of fair value gap is a bullish fair value gap, and we term is at BISI, Buyside Imbalance and SellSide Inefficiency. It is a 3 candle pattern, and as you have read in the previous slides, if we want to mark a bullish fair value gap, we will take the first candle low and the third candle high. So we have marked this fair value gap as shown below. Also, an important thing to remember is that 50% of any fair value gap is known as constant encroachment. As you can see, it is written in the notes here. You can download this PDF from the link in the description below. So as you can see, 50% of any fair value gap is called as constant encroachment. And a general rule to remember here is that good fair value gaps would respect this 50% level or constant encroachment level, which is 50% of the fair value gap. So I hope it is clear. Now let's move on to some examples. So as you can see, we have a bullish fair value gap here, or we can say as BISI. How did we mark it? We took the first candle high and the third candle low. The gap remaining between them was our BISI. So now when price came and tested it, respecting the CE level, 50% level, are you seeing this? This is an important level. 50% level is respected, and if you had taken a long here with a stop loss somewhere around here and targeting new highs, you would have a successful trade. So I hope it is clear now. I have also attached a second example in the PDF which you can view and download the PDF so that the video doesn't get long, and it is similar example. So a second type of fair value gap is known as SIBI, and it is the complete opposite of BISI. It is a bearish fair value gap, and we can say it as SellSide Imbalance and Buyside Inefficiency. It is a 3 candle pattern, and as you know from previous slides, how do we mark bearish fair value gaps? By taking the first candle low and the third candle high, we mark this bearish fair value gap. So I hope the marking of SIBI is clear and its purpose is clear. It is a bearish fair value gap. Also, the constant encroachment level shouldn't be breached in this SIBI fair value gap as well. So now let's move on to some examples. So here you can see we took the first candle low and the third candle high and marked a SIBI. So when price retested it again and gave us a reaction, we took shorts. So if you had placed a short here with a stop loss above here somewhere, and targeted new lows, you would have a profitable trade. So you can also see that the 50% level, that is the CE, is also respected in this fair value gap. So I hope everything is clear. I have also attached another example of SIBI and every fair value gap that we will cover in this video, so you can see it in your free time. So our third type of fair value gaps is inverted fair value gaps. Up till now you have studied that BISI is a bullish fair value gap and SIBI is a bearish fair value gap. Now when highlighting inverted fair value gaps, the roles reverse. BISI turns into a bearish fair value gap and SIBI turns into a bullish fair value gap. Also, a thing to remember here is that you will use these inverted fair value gaps only in the premium and discounted levels. I hope everything is clear up till now, that in inverted fair value gaps the roles reverse. BISI become a bearish fair value gap and SIBI becomes a bullish fair value gap. So now let's see how do we utilize it. Suppose this is your premium and discounted level, this is your premium, this is your discounted. Now you will use the BISI as bearish fair value gap or inverted fair value gap only in the premium level, because we look for shorts in the premium level, and you will look for longs with SIBI, that is as inverted fair value gap, in the discounted level, not in the premium level, because we look for longs below the 50% level and we look for shorts above the 50% level. So I hope this is clear as well. Now let's move on to some examples to clarify the concepts more. So here you can see this is an example of BISI used as an inverted fair value gap. So what does this mean? Will we see a short trade or a long trade? Obviously long trade, because if we use BISI as inverted fair value gap, it turns into a bearish fair value gap. So let's mark it. Here you can see it is the first candle high, this is the third candle low, this would be our BISI. And we will be using it as an inverted fair value gap. So any taps into this level, we will look for sells. So let's see what price does. Price came into this level, gave a wick respecting the constant encroachment, that is the 50% level, and then we dropped. So price came into this fair value gap, respected the constant encroachment level, and we gave a sell off. So if you would have taken a short somewhere around here with a stop loss above this level and target these lows, you would have a successful trade. I have also attached a second example of inverted fair value gaps in the PDF, which you can view it yourself. So now let's move to our fourth type of fair value gap, that is Reaper FVG. This is a new type of fair value gap which ICT has introduced 4 months ago. This is a type or subset of inverted fair value gaps, and ICT has used this very adaptly to take precise trades. So let's move to an example to explain it more. So here you can see we have marked a SIBI which is used as an inverted fair value gap. So this will act as a bullish support. Now when price retests it, we can take longs here and stops somewhere below here and target new highs. So this is a new kind of fair value gap which I haven't used so much, but ICT has taught this 4 months ago, so I thought of including it here. So let's move on to our fifth type of fair value gap, which is balanced price ranges. You can't use this in isolation and you need a higher time frame bias. So let's see what balanced price ranges mean. Basically, it is an overlap of two fair value gaps. You can see this is a bullish fair value gap, BISI, and this is a bearish fair value gap such as SIBI. The overlap of this, that is the red area that I am also coloring with the orange, is balanced price ranges. When market tends to move volatility in both directions, it tends to create this balanced price range, and before taking a direction, market usually taps into this balanced price range and then moves ahead. So let's move to an example to make things more clear. So here you can see we have BISI marked in gray, you can extend these lines, and we have SIBI marked in the dark orange. You can see here this all area is SIBI. Now the overlap of this, that is the light orange, you can see the overlap of these two fair value gaps created a balanced price range, and price wigged into it before taking an actual direction. So if you had placed a short here with stop losses here and take profits here, you would have taken a good profit home. So let's move to a last and most important topic, how to identify high probability fair value gaps. The 5 factors that I look for before identifying high probability fair value gaps are: firstly, I would mark them on higher time frames such as the weekly levels and monthly levels. Secondly, they must have violated previous fair value gaps. So what do I mean by that? So let me give you an example of that. So here you can see we have the first candle low and the third candle high. If we mark this fair value gap as SIBI, which is the bearish fair value gap, and now price came and violated this fair value gap, it didn't respected it, it didn't came down, it shot up. So it violated this fair value gap and created this orange fair value gap, which is known as BISI or bullish fair value gap. So when this BISI has violated this SIBI, it will be a greater or stronger fair value gap than the previous SIBI. So I will give more importance to this fair value gap because it has violated previous fair value gap. So I hope this explanation is clear of the second point as to what I mean by violation of fair value gap. The fair value gap must have single test. This is pretty evident. Also, the fourth point is that there must be consecutive fair value gaps in the same direction. So let's look at an example as to what I mean. So from the fourth point, I mean if after a bullish FVG there is an other bullish FVG, I will give it more importance. This would be more stronger. So let's see an example here. We have a bullish FVG here termed as BISI. Now you can see an other bullish FVG is also forming here with the high and third candle low. This would be our FVG. So I will give more importance to this BISI as well, as this becomes a stronger BISI. So this is one of the more key points to identify stronger and higher probability fair value gaps. Now the fifth point is that the fair value gap must overlap with some sort of order block. If you aren't aware of what order blocks are and how to use them, you can check the video in the description below. So now let me explain it to you through an example as to what I mean by the fifth point. You can see here, this is a bullish breaker. This overlaps with this BISI, orange shaded. So this becomes a very strong BISI which I would consider as high probability and will take trades from. Now let's look at an example as to how I will apply all those 5 points to take a trade from a high probability fair value gap. Now here you can see we have a bearish fair value gap which we marked by taking the first candle low and this third candle high. We marked a bearish fair value gap known as SIBI. Our first condition is met as this fair value gap is on the weekly time frame. Now let's see if it overlaps with some sort of order block. Yes, it is overlapping with this bearish breaker. So 2 of our conditions get fulfilled. Now coming on to the third condition, that is of single test. As you can see, price only tested it one time. So this condition is also fulfilled. Now coming on to the fourth condition, that is it must have violated the previous fair value gap. And it has violated this small fair value gap that we could term as BISI was violated with a SIBI. So this is more important. So 4 conditions are being met. So we will for sure take a short from here, put our stop losses above here and target new lows. So I hope everything is clear. If you like the explanation of fair value gaps, do check out other videos in this playlist as I am trying to simplify ICT's concepts in a concise and simple manner.